Good evening and welcome to tonight's live webinar where we look at ASX investment opportunities in review for the 19th of October. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which includes our model portfolios across the ASX 2050 100 as well as the S&P 100. It also includes access to our ASX and US high conviction models. We also operate an independent portfolio where we can work in partnership with you to execute specific ideas or strategies, and we can utilize derivatives to enhance portfolio returns. If you'd like to know more about our broking account, please contact me on 1300 614 002. The technology that I'm using tonight is the Investor Signals member area. You can subscribe to that for $1,320 for a year, or you can obtain a free trial by visiting investorsignals.com. The graph on screen is the Nasdaq. We're completed the first week of earnings for the third quarter, so for the period ending September. For the S&P 500, we've mostly seen the bank results come through so far, and the bank earnings are down as expected. Probably the bright spot that investors are focusing on within the US banking sector is that their provisioning for bad loans was much lower in the third quarter than the second quarter. And a point of note is that JP Morgan is looking at recommencing their share buyback. So there's a couple of positives there in the US banking sector, but the actual earnings results were down substantially, I think roughly around 30%. The next test for the US equity market is the Nasdaq, and this is the area that we've focused on. I've spent a bit of time talking about the high PE ratios and the need for earnings results to deliver, and at what point is it too much to pay for growth. The chart on screen shows the Nasdaq index. We're just below the prior high, and we'll be watching to see how the market trades under that resistance level. With that, let's have a quick look at the major indices that we want to focus on. So I've loaded them into my watch list. I've loaded them into custom list number 1. Click on the code and we can have a look at the Nasdaq. So we can see at the moment that it's above the average, so where we get a little bit cautious if we start to see it roll over and close below that average. Again, just given that backdrop of high valuations. The S&P 500 index, slightly a few percentage points lower than the Nasdaq below that high, but for the most part, both the S&P and the Nasdaq have exceeded that 50% recovery off the recent low in September. But again, we watch these closely for whether we get a close below these moving average as a sign that sentiment's just starting to soften. The XJO remains relatively strong, so we've had the buy signal off the low there at around 57.50. We're now pushing up to 62.30. And I've shuffled the support line up a little bit tighter here, and we could almost even bring this up under the session low of Friday, and again just watch to say that maybe a little more caution if we see a close below that support or below that average, and I'll update you on the blog as we sort of continue that analysis of the indexes. Tonight what I wanted to do, rather than go through the ASX full 100, I think we're developing a pattern of kind of 1 week covering the full 100 and then the following week maybe focusing more on some specific lists within the member area. Tonight what I want to do is focus on the holdings within the ASX 100 portfolio. So what I do here, click on model portfolio, come down, select the ASX 100 model, and within this screen you can organize it alphabetically, or you may choose to organize it by days held, or you could organize it by percentage gain or loss. So what I've done here is highlighted the order in the most recent stock that's been added into the model and working our our way down. So CSL was recently removed from the model after being in there for around 5 years. So the duration that a stock can sit in the model for might be anywhere from months to years. So this is more of a longer term investment portfolio, but it's certainly interesting just to have a look at some of the setups, even from a trading standpoint, of these stocks that are within the model. So with that, we'll start with the first one, which is Cleanaway. We know this is delivering low levels of earnings growth, but it is a defensive income stream. I do like the medium-term growth prospects for Cleanaway. They do have some negative headlines that they're working through in the media at the moment around management and CEO behaviour, and now there's some allegations around the practices with disposing of hazardous and in some medical waste that they're handling. So there is a bit of negativity in the media which would be weighing on sentiment around Cleanaway. But around this $2 to $2.30, I would suspect it proves to be good long-term support, and the growth prospects for Cleanaway on a 2-3 year basis look attractive to us. So from a risk reward, Cleanaway, I've marked it on the blog, support there at around $2, and again there at around $2.15. Iluka, so this was recently added into the model portfolio. Iluka has the demerger occurring. The vote went through today, so the demerger will take place possibly on Wednesday or Thursday this week. So the iron ore spin-off, and I think owning Iluka ahead of that and participating in the spin-off, I'd expect the spin-off to trade higher almost on the first day of trading. So there's value there to be unlocked by being long Iluka coming into that spin-off. Computershare added into the model portfolio down here at around this $11.80 level. Of note is the takeover bid for Link, the Computershare's main competitor here in Australia. The premium on that takeover was up at around $5.10, so it must have been something in the order of 22% premium to the previous traded price. That bodes well for Computershare, but we know that the earnings outlook is quite soft for Computershare. They guided to a further fall in 20% earnings in over the next 12 months. So we're still looking for sort of support to develop within the earnings picture, but I think sentiment around the sector is obviously receiving a boost as a result of that Link takeover. REA switched from sell conditions to buy conditions here at $106, now trading $122. Wesfarmers under buy conditions there, supported at $43, now pushing $48. Some of the areas of the market are starting to look a little expensive and maybe prone to more sideways consolidation, but certainly Wesfarmers we like and we're holding that. Cube switched to buy conditions there at around that $250 level, now pushing $280. Continue to like that. Coles, we think there's upside opportunities here in Coles, but originally switched to the buy conditions there at around $16.80, now pushing $17, or almost $18 I should say. Spark Infrastructure, I've been reading a number of analysts are upgrading Spark Infrastructure and in some cases adding it to their high conviction portfolios. So at around this $2 level, the algorithm is flagging the higher low formation, and it's just worth drawing your attention to that support there at around $2 and the stock price above that short-term moving average. A2 Milk's obviously had its troubles, predominantly impacted by flight restrictions and travel restrictions into Asia and in particular into China, which is impacting some of their distribution channels. Keep an eye on this at around this $14 level. I suspect it does find support, but maybe the turnaround for it is more now dependent upon international travel recommencing, in particular with China. Brambles, we see this as a value opportunity in the market where the downside risks are fairly limited and the upside is back up to around $12. So buying Brambles at around this $10.50 level is a good opportunity. AusNet Services not doing there at the moment, but it certainly had a good rally off the algorithm buy signal there from 167 up to $2. So a little bit extended at the moment. Sonic Healthcare, This is one of the better performing stocks in the model portfolio, but it is getting up to a fairly expensive level where you could think about taking profit where it is at the moment. Ansell, we like this. It was under original buy conditions from early in 2020, and then we've had a further confirmation on this higher low here at $35. Stock now pushing 40, and we hold it across our portfolios. Beach Energy, the energy complex in general has been a bit disappointing, but Beach is bouncing sideways around that 125, 135 level. Alumina starting to get some buying interest there today, and you can see the support there at around 130. Orica, we like this. I've been flagging it on the blog, so support there at around that $15 level. The stock price is above the average, so continue to like that as an opportunity on the long side of the market. Flight Centre, there's some clear risks here, but we're increasingly seeing noise around planning for bubbles of international travel to recommence, and maybe Flight Centre's a recovery consideration for next year. Appen Limited, so it's been in the model portfolio for quite some time. Originally first switched to buy conditions there at $20.50, now pushing up to $36. We had the more recent signal there at $31. So continuing to move higher in support off that 31 level. Now Newcrest is one that is an opportunity in the market. Gold's continuing to trade above 1900 an ounce, and buying Newcrest between $30 and $32 is a place. There's a place in portfolios to be accumulating and adding that. Ramsay Health Care, so just having a look at this and buying it on the dip. Any pullback back down to sort of that 63 to 65 level is a buying opportunity there for Ramsay. APA Group, we like this name, been buyers of it off this $10 support, pushing up towards 11. Could see it maybe trading up to $11.50 to that $12 level maximum. Fortescue, so been under buy conditions since July 2019 at around $8.40. Stock now pushing up to $16. We had a more recent signal here at $15.50, so continue to buy it off that support level. Fisher Paykel again switched to buy conditions back here in May 2019, and we've had a more recent signal there at around $29. Stock now pushing $32. Sydney Airports, the recovery for the moment in Sydney back to around $6 probably captures, I think, the most part of this recovery that's taking place. QBE Insurance doesn't rate high on my list of sort of preferred stocks on a fundamental basis, but support there I've just put in there off that $8.50 level there, but it is below the average at the moment. ResMed, one of the better performing stocks, continues to sort of compound under these consecutive buy signals, and their most recent round of signals came through in September around that $23 level. From a fundamental standpoint, we were hoping to see it back at $22, never traded down to there, and it's rallied above that support and above the moving average. JB Hi-Fi under buy conditions from the support level there, now pushing up to $52. ASX, so been under buy conditions for quite some time, so it was originally added into the model back in 2016, and we now look at the most recent signal here at around that $80 level. I've put support in there at or near that $80, and for the moment the stock price is above that and above the moving average. Saracen Minerals has been added into the top 100 model portfolio, continues to make higher highs and higher lows. Obviously we have the merger which will take place next year between Northern Star and Saracen which will be a substantial merger with significant cost synergies. NextDC, from a fundamental standpoint, this is expensive, but as pure momentum plays, you're seeing these higher low formations and this stock continue to rally. The most recent signal there at $6.50, the stock now pushing up towards $13.70. Northern Star, consecutive buy signals all throughout this higher low structure. The most recent signal there on the test of 1284, now pushing up towards 1625. And back to Cleanaway. So what we've just done there, just to recap, we've gone model portfolio, we've come in, we've selected the ASX 100, organised it in days held, and we're just analysing each of the stocks that have been added into the portfolio. Now, they get added the first time they switch from sell conditions into buy conditions, so it's not continuing to add to the position on subsequent signals, but as long as it stays under buy conditions, it stays in the model portfolio. So this is the date that the stock was added, and if you want to have a look at recent stocks that have been closed out, you can see there that, for example, CSL delivered 249% gain. We've had some, as you go through, some substantial gains there in the top 100 model portfolio. When you look at the average performance of that, it's outperformed the XJO. Equally, you can come in and say, have a look at what's in the top 20 model at the moment. So Brambles, Coles, Fortescue, Newcrest, Wesfarmers in the top 50 model. Few more names in there. ASX is among the top performing stocks, so is Fortescue. And a new feature that we've added in here is the high conviction. So within these models, you can turn on the envelope to receive a notification for when a stock's added or removed to the model, and we'll soon have that feature available for the high conviction. But in here is the ASX high conviction, so I'll just finish tonight with moving through these names. So if you have a broking account with us and you're participating in one of the models, so meaning you may add money to the top 20 or the top 50 model, and then you may also want to have exposure to the high conviction model, these are the stocks that are in that portfolio at present. So again, we organise it by days held, and let's just move through and have a quick look at these. So ASX has been added into the high conviction, and I discussed that on the blog Iluka. We hold that coming into the demerger. Fortescue, we hold that off the recent support level. Fisher Paykel, we bought into that off the algorithm model there on the pullback. The IOZ, which is just a way of capturing exposure to the buy signal there in the index, and that sits in the model at the moment. The Cure ETF, this is exposure to broad US biotech portfolio. I've flagged this on the blog a number of times. It's getting up into our initial target of around $65 there. And if we have a look at it, was added in at around $55. Wesfarmers, so this has been added into portfolios off the low there at around that $43 level. A2 Milk, not performing so well. It's one of that and Lendlease are the underperformers in the high conviction portfolio, but for the most part all the stocks added are performing well. APA Group, support there at $10. It was added into the model and that's performing well. Pro Medicus has been one of the better growth stocks. We're up around 25% in that at the moment and continuing to perform strongly. Sonic Healthcare, again, terrific performer. We added that into the high conviction portfolios at lower levels. CIMIC, we've been patient here with CIMIC. This has been one of there's not too many stocks under sell conditions that we add into our high conviction portfolios, but the fundamentals for a recovery play in CIMIC seem to offset those risks, and we've seen the stock rally today on the announcement that they're finalising the sale of 50% of their mining services business. So you're seeing the stock rally off the back of that. But over the next 2 to 3 years, I think the outlook continues to get brighter for CIMIC. CSL, so we continue to hold this at the moment, but recognise that it has shifted to sell signals, and we start looking for an opportunity to exit CSL, and that's really of a trade between 307 and 320, gets it back up into a range where we look to take profit. Gold Road Resources, so Gold Roads and Newcrest, our preference there, so Gold Roads off that 140 support level. Lendlease, so this is a company that obviously is going to find the current environment difficult, but if there is some gradual transition to business as usual globally, then Lendlease is going to be a beneficiary of that. High quality company, and again, like CIMIC, a little bit of a recovery opportunity over the next 1 to 2 years. The BetaShare Bank, so if we think about exposure to the banking sector, a little more comfortable doing that through this BetaShare Banks ETF, with JP Morgan being the largest weighted holding there. Ramsay Healthcare, as I discussed, we like that, and that sits in our high conviction portfolio, as does Sydney Airports, but we're starting to look at that a bit closer and determine whether we want to take profit on that. TPG and Telstra look like an opportunity. But TPG sits in the high conviction portfolio at the moment, as does Orica. Vanguard, which is the global infrastructure ETF, we added this at lower levels, now pushing up towards 56. We'll look for this just to move a little bit higher. Again, recognise that it's shifted to sell signals, but continue to watch it trade above that moving average, and may look to take profit on that as it rolls back below that. Brambles, so hold that in the high conviction. Newcrest, Coles Group in the high conviction model. Oil ETF, we think that this is a recovery opportunity in global markets into next year, so we've added that in. BHP, so both BHP, Rio, although I think BHP is our main holding because of the energy exposure there. ASX we like, but recognise that it's fairly expensive. So not looking for it to recapture those old highs anytime soon, but good contributor with dividends and franking credits. Iluka we like, Fortescue, and I think we're sort of moving back through the list again. So again, that's the model portfolio going in under high conviction, and you can have a look at the stocks that we're holding in that high conviction portfolio. Another area of the software which I'll just touch on briefly this evening is the trade table. So just to remind everyone, this is the way this works, is it stores the, let's try just refreshing that. There we go. So the way the trade table works is if we have a look at a chart of Wesfarmers, what you'll note here is the stocks under algorithm buy signals. It has a green arrow pointing up, which is a shorter term momentum indicator, and the stock price is above the moving average. So if you're looking for a buy opportunity in the market, you're getting the higher low confirmation through this signal, then you're getting the shorter term pivot signal higher, and then from a real momentum standpoint, you're then waiting for it to be above that moving average. So if we came into the model portfolio, the trade table, what this list is telling us is out of the top 20 stocks, the ones with the double green arrows have those conditions in common. So they're under buy conditions, which is a long signal. The pivot point arrows pointing higher, and today's share price is above the moving average. So the stocks with bullish momentum within the top 20 at the moment are Wesfarmers, Newcrest, Fortescue and Coles. Brambles doesn't quite have all those three elements lining up. It is under buy conditions. It does have a positive pivot point, but at the moment the share price is below the average. So an example of watching for a stock to be added would be when Brambles moves above the average, as a way of reminding you as an entry opportunity. On the short side of the market, it's the same in reverse. So which stocks under short signals have a negative pivot point and are currently below the average. So there's only two, which is Aristocrat and Transurban. So that's an analysis of the top 20. You can do that by looking at the top 50 or top 100 as well. Thank you for listening in tonight, and I'll just finish off with a reminder of the XJO and what it is that we're watching there, and I'll keep you updated on the blog. So we're mindful that we're coming into a period of US earnings where we start to see the tech results. There's some lofty valuations that the earnings have to live up to, and as long as the markets which we have all three, the Nasdaq, the S&P and the XJO, are currently above their moving average. We assume the market and the momentum continues to grind higher, but as we start to see those roll over, in particular in the Nasdaq, I'll draw your attention to the hedge basket, which is BBOS, BBUS, GDX, the Yank and others that provide insurance to portfolios and a way of profiting if the market falls. So keep an eye on the blog over the coming days. Thank you for listening in, and I look forward to speaking again next week. And if you'd like to talk to me about setting up the free software trial or establishing